Tesla's Q1 deliveries is gonna be worse than expected. You see guys, in the beginning of Q1, I thought Tesla's gonna be delivering around 480,000 vehicles. Then we saw what happened to Giga Berlin with the shutdowns, and then with someone trying to blow it up, and then some other stuff happening in Shanghai with the New Year's, for Chinese New Year's, lunar holidays, as well as some stuff going on in Fremont. After doing a revision on this on X, if you guys aren't following me on X, I don't know what you guys are doing because I post a lot of juicy Tesla stuff there too and some other stuff as well. I posted that my revised delivery numbers for Q1 is just below 440,000 vehicles, and everybody, and I'm talking about everybody, was going like, that's way too high. And I'm just sitting here and I'm like, how the heck is this high? And shout out to Troy Tesla for reaching out to me. And we went back and forth. We looked at the numbers, what was the real, what was going on, why it's too high. And well, I revised it back down, and it's pretty low. It's pretty darn low. This quarter, I think everybody's expecting to be not a good quarter for deliveries and EPS, and we'll take a look at this in this video, looking at deliveries first. And this is my final delivery estimate for Q1. EPS, we'll wait until what the actual deliveries are, then we can see what the EPS are, but we'll dive into that as well. So let's get down to it. Let's not waste any more time. Smash that like button and hit subscribe if you haven't already, man. Let's go. So here's my production and delivery estimate for Tesla for Q1. As you guys can see, if you guys watched my previous video on this, for March, it was 93,000 production. I brought that down to 75,000 because, shout out to Troy Tesla again, he said that in March, half of the entire month at least, it looked like Tesla reduced their working hours from 6.5 days to 5 days. And it has a big impact on it. So that's how we got the 75,000 down from 93,000. I thought that this month could have been a quarter in production. But if that's the case, if that's what actually has happened, well, I guess we got to bring it down to 75,000. For Fremont, I reduced it down from, I think it was around almost 150,000 all the way down to below 125,000. And apparently this is, even this is still too high, because for pretty much half the entire Q1, Fremont has stopped producing the Model 3 because they're trying to adapt or trying to make the new line for the refresh model of the Model 3, as well as the hardware changes to S and X's. So that has a lot of, slowdown in production as well. For Berlin and Texas, I had to bring down Berlin because of all the incidents with the blowing up someone tried to blow up the factory, and as well as the Red Sea incident. And Texas, well, I was a bit more conservative with Texas, brought up a little higher. Nonetheless, we get a total deliveries of over 420,000. So yeah, not the best quarter, but it looks like this is happening, right? But let's go see how this will look like in the EPS for this year, and what we can expect, what the stock price could be, the revenue, all that kind of good stuff. So smash that like button, guys. I know it ain't smashed. Let's go. Here's my Tesla stock price prediction chart for Q1. Well, it's for all the quarters. We're going to look at Q2, Q3, Q4 as well. And you guys can get access to this on my Patreon right over here. You guys can play around with it, see what you guys think would happen. Everything's formulated. We're just flipping. Awesome. So let's get down to it. Q1, it was 420,000 vehicles and 471. As you guys can see right off the bat, $43,000 per each vehicle sold, thanks to the price increases that they're doing, what Tesla's doing, and the Cybertruck. So we do that, and bam, look at that, 18.2% when it comes to GAAP gross margin. So that's good. That's like, I think, meeting on par. No, it's more than Q4, definitely more than Q4. So that's really good. I am giving it a 16.8% vehicle gross profits per each vehicle. It could have been more if we did close to 480,000. Probably would have been closer to 17% because of economy of scale. And maybe because they did 420,000 deliveries, this could actually be lower. But because of the Cybertruck, because of the price increases, I left it at 16.8%. So that's what happens. And you guys can see for the other 3 quarters, not years, I did increase it as well drastically, and you'll see why. Operating margin of 8%. Now, this is good. If we can stay above 8%, and this is a decline from Q4, which was 8.2%, if we can stay 8% at least, then that would be pretty good. Overall, total revenue for this quarter is almost $23 billion. Net income GAAP just below $2 billion. Net income non-GAAP almost reaching $2.5 billion. We get an EPS GAAP of 56 cents and the street is looking at 56 cents. So right on. Exactly, we're meeting expectations. So that is a sheesh moment. If we can at least get a meet here, that'd be awesome. But if we get a miss, I think the market is pricing in the miss. But the guidance is more important for Q1. Usually the stock reacts harder on guidance rather than the actual report, because everybody knows that 1/4 of Tesla is not going to matter in 3-4 years time. That's all I'm going to say. Now I know for the non-GAAP it's 70 cents. It should be 56 cents because that's what Wall Street is looking at when it comes to this Q1. This isn't my final EPS for Q1. It's only a delivery that's been finalized. So I still got to do some work with the numbers and such like that. Let's just continue with the gap and see what could happen, because that's what really matters when it comes to the actual stock price or not. Moving on to Q2. So Q1, it's not really looking that great. In Q2, I do think I don't think there's going to be any shutdowns or any unexpected things happening. 500,000 vehicles. 17% gross profits here as well. We get 8.6% in operating margin, which is absolutely a sheesh moment, which is pretty darn. I mean, the operating margin is going in the right place. The total GAAP gross margin is, stable. So that's also really good. In Q3, I'm going to put 525,000 vehicles, which is about 18.4% in total GAAP gross margin. So again, it is in the incline as well. And this is not including the FSD. If there's an increase in take rate, that is not included. So if we do include that as well, that's gives a bit more of a bullish take. So I'm excluding that for now. I am just leaving the average selling price at around 43,000. That's all I'm doing. On Q3, we get 8.8% in operating margin, which is, we want to see the operating margin continue to go higher and higher. In Q4, maybe around 550,000 vehicles. If you add all these numbers together, guys, the total deliveries is below 2 million. I do think it's going to be closer to 2.2 million if there's an interest rate cut, which I do think there will be some sort later on this year. But we are looking at it at the worst case scenario. We can see operating margin bottoming out, but the total GAAP gross margin continuing to go higher. Still, that's in a good trajectory. Now, let's see what the stock price could be in Q1. If you guys are ready, man, smash that like button, because I know that like button ain't smashed, all right? Let's go. PE for Q1. Right now, the PE is around 42, around 170, 178. That's a stock price of 177 if you want to maintain it with a lower EPS. Personally, what I think is that a lot of investors are looking past Q1, Q2, probably even Q3. They're looking more into the next year or two. I could probably see a PE being as high as 50, around the 211 mark. So I'm going to keep it around there, just to be conservative in a way. In Q2, because they did a record delivery of 500,000 vehicles and the margins are going up, the operating margin is going up. Maybe we could probably see a PE around 60, around there, but that's the max I can see it. If there is no interest rate cuts, if this 43,000 goes lower and we see more negative impact, I can probably see the PE going as low as 45, maybe even 40, around the 160s. The lowest I can see it going is at around the 30 PE. Well, no, 30 PE is a bit too low. 35 PE around the 140s, but that's the lowest I can see it going. But I'm an optimistic guy. I'm going to leave it at 60 PE. Q3, 525,000 vehicles deliveries. Total GAAP gross margin is an increase, and then we have operating margin as an increase. I mean, giving this around the 65, maybe that's too much. 60 PE around there, being in the mid 200s does make sense in this case. If they're trying to also price in the FSD stuff and all the energy growth. I mean, the energy. Look at energy, guys. It's going pretty nicely. That is a really sheesh moment when it comes to the energy. Last but not least, in 550,000 deliveries in Q4, you guys can see the fiscal EPS has gone lower from 417 to 268. Well, that's because in Q4 we had that massive tax benefits that came back to Tesla. I'm not too sure if we're going to get the same one in Q4. No idea. But for this, we got to give it a higher PE. Maybe around 100 would make sense, around the 270 mark. And around there does look like a realistic price target for Tesla here. My price target for Tesla in 2024 is 350, which would probably be 130 PE. Exactly around 130 PE. Why do I say that? Well, because, Q4, Q4, a year out from then is the compact car. right? So I think they're maybe pricing this in. If FSD is continuing to progress, maybe that's also pricing it in. And they're also probably pricing in a better 2025 and 2026. 130 PE, $250 per share is my price target for this year. Is it realistic? Probably not. Maybe 270, 280 is for this year. But Tesla stock is very volatile. You never know what it's going to do. It can go down forever, then it can go up forever. It can spike down and spike up. It's a very volatile stock. So that's what I think is going to happen in Q1. My final Q1 delivery estimates, 420,471 vehicles being delivered. Let's see what happens. I am going to go live for the delivery report. That's going to be pretty darn interesting. Make sure you guys tune in for that. But here's the thing, guys. It doesn't matter, right? Q1 doesn't matter. Q2 doesn't matter. Q3 doesn't matter. It doesn't matter. What matters is Tesla's trying to solve autonomy. Now, yes, we have the compact car coming later as well. That's going to give a nice, good boost growth to Tesla. And then once we get the interest rates going down, that'll help as well. The vehicle side will recover eventually. But what matters is 3 years down the line, 4 years down the line, 5 years down the line. My investment, you guys already know, I'm going all into Tesla stock. My investment, I'm not touching it until 2030 unless there's a massive run up, another 10, 20x, then maybe. But I'm not touching my investment until at least 2030. And here's my stock price prediction every single year until 2030. I do have to make a new version of this. But nonetheless, my 2030 stock price prediction stays pretty much in the same, area as this video. Check it out, y'all. We've been supporting. Guys, I bought the dip t-shirt. I'm wearing it right now because we know in 5 years time, today's the dip. Today's the dip. Subscribe and I shall see you guys in the next video. See ya.